Good multifamily deals are really hard to come by today, with a lot of sellers still holding out hope that pricing is going to go back to early 2022 levels. But with where interest rates are sitting right now, most buyers just aren't able to get to those price points and still hit their target returns. But even when market conditions aren't ideal, experienced analysts and investors know that there are always deals out there as long as you know where to look. So if you're having trouble finding opportunities in the current real estate environment, in this video we'll walk through 4 of the biggest green lights for multifamily analysts and investors looking for deals that can meet or exceed return expectations regardless of what's happening throughout the capital markets. So the first thing investors will often zoom in on when looking for a profitable deal is a clear opportunity for value creation with very low levels of risk. A great example of this is adding washer and dryer appliances to multifamily units that already have washer and dryer hookups, with the appliances themselves usually only costing between about $1,000 and $1,500, and renters typically paying about $50 to $70 more per month to have these in place. And even if we assume these costs are on the high end of this range, if a $1,500 investment can help generate an additional $840 per year in rent, that's a 56% return on cost with very little work or risk involved. And when you spread that out over a property that might have 200, 300, 400 units or more, the impact on the revenue that property can generate can be really substantial. Another great example of this is a situation where a seller has prioritized minimizing vacancy at all costs, doing everything possible to keep the property 100% occupied at all times, which almost always results in rents at a property that are anywhere from about 10 to 25% or more below market. These types of scenarios often come up when the seller is an individual, has owned the property for a long period of time, and has used that property to generate predictable monthly income at the expense of maximizing revenue, which gives a new owner a really low risk opportunity to step in and raise rents to market rates on new leases and renewals without having to take on any costly or time-consuming renovations. And speaking of renovations, another example of this is a deal where the current owner of a property has already proven out a value add opportunity but hasn't finished this entirely, leaving opportunity for the buyer. These cases typically involve a seller having already renovated anywhere from about 5 to 15% of the units at a property, generating significant rent premiums on those units once those renovations were complete, and all the buyer typically needs to do in these situations is step in and continue that process over a longer period of time. Now, the next thing that investors will often look for that can add a lot of value to a property very quickly is underutilized common area space that can be repurposed to generate income. There are a lot of properties out there that have things like closets, sheds, or entire plots of land that sit entirely unused, and these can often represent huge opportunities for investors to turn these into income-generating assets. Tenants are often willing to pay an additional monthly fee for access to things like storage units, bike lockers, package lockers, or even co-working spaces, and if you can find ways to utilize unused space at a property, this can be a huge unlock from a revenue perspective. A lot of properties will also have opportunities to add things like carports or garages to an existing parking lot, especially if comparable properties in the market also offer these, and things like dog parks or dog washing stations can attract a wider base of residents and generate higher pet fees and monthly pet rents overall. Now, the next thing that investors will often zoom in on is on the expense side of the equation, and this is recurring monthly costs that could quickly be reduced. This can involve things like renegotiating major contracts for things like janitorial services or on-site security, bringing in a different property management team with a more favorable fee structure, or even using AI to replace a percentage of salaried leasing agents with virtual leasing assistants that can help prospective residents. Another common way investors will reduce operating expenses at a property is by curing deferred maintenance or taking care of things like major roof, HVAC, or electrical repairs up front, which can often significantly reduce ongoing repair costs and can increase the NOI and the value of a property overall. Other big expense line items that investors may be able to reduce are insurance premiums through negotiating more favorable terms than the seller, or even appealing a recent property tax bill if valuations have dropped in the market and the property needs to be reassessed. Now, the last thing I want to mention in this video can take a little bit more work up front, and this is finding motivated sellers that have an incentive to offload a property quickly. Today, we're seeing this most with investors that used floating rate debt between about 2020 and 2022 that are seeing rate caps expire, or upcoming loan maturities where refinance proceeds won't be able to replace their existing loan amount. But even though we're seeing a lot of this right now, motivated sellers also exist even in more normalized interest rate environments, and there are other reasons why investors might need to sell quickly that often come up in the multifamily market. The first reason is that some investment firms are actually required to sell their properties at the end of what's referred to as their fund life, when all assets in the fund need to be liquidated based on the terms of the fund's operating agreement, which means that even if market conditions aren't perfect or the seller hasn't entirely completed their business plan, they'll still need to sell off properties and return capital to investors. There are also a surprising number of investors out there that will hold properties indefinitely with the goal to pass these down to their heirs at a stepped up basis when they die. But in a lot of cases, those heirs don't know how to manage commercial real estate and don't really care to learn, and would rather just sell the property and avoid these things altogether. In these cases, investors can often come in and acquire these deals at below market pricing, typically in exchange for making the transaction process itself as smooth and painless as possible, or sometimes even including unique deal structures like seller financing that can continue to provide an income for the family even after the property is sold. Partnership disagreements can also lead to forced sales in the market, typically resulting in opportunities for investors to acquire properties with a significant amount of value left to be created, and often even at discounts to market pricing in exchange for a quick and easy closing. So while the days of easy money in real estate that were primarily a result of interest rates and cap rates falling for more than a decade are very likely over for the foreseeable future, these are a few tried and true things that multifamily investors will often look for to quickly increase revenue, decrease expenses, and ultimately create value in a real estate investment. And if you want to learn more about real estate investment analysis strategies and how to actually build out pro forma models to analyze both acquisition and development opportunities across multifamily, retail, office, and industrial properties, or you want to make sure you have the skills you'll need to land an analyst role at a top real estate investment or development firm, make sure to check out our all-in-one membership training platform, Breaking the CRE Academy. A membership to the Academy will give you instant access to over 120 hours of video training on real estate financial modeling and analysis. You'll get access to hundreds of practice Excel interview exam questions, sample acquisition case studies, and you'll also get access to the Breaking a CRE Analyst Certification exam, which covers topics like real estate pro forma and development modeling, commercial real estate lease modeling, equity waterfall modeling, and many other real estate financial analysis concepts that will help you prove to employers that you have what it takes to tackle the responsibilities of an analyst or associate at a top real estate firm. And if you like this video and want to see more content on the channel on real estate investment analysis, make sure to hit the like button and let me know. And if you're a multifamily investor watching this right now, let me know in the comments any other things that you look for specifically when analyzing deals. As always, thanks so much for watching, guys. I hope you found this helpful. Subscribe to the channel if you haven't already to see more videos like this every single week, and I'll see you in the next video.